Good morning. This is Howie, and I'm here to help you win with money. Today is January 26, 2021, and I want to do something a little bit different. Today, I want to talk about energy companies and utilities. Market looks like it's going to open up, so this could be a good trading day. I want to look at one of my favorites. I own NEE. You can see here is the chart. PE ratio is really high, fairly low dividend, 1.6. But what I want to show you something is there's a couple of things that are interesting. There was an earnings release, but I'll cover that later. If you look down here, NEE will be joining the S&P 500 Dividend Aristocrat list. Those are those that pay out dividends or increase dividends for 25 years or more. I'm excited about that. So let's go into some of the data here. I want to show you something with NEE. First, we're going to seek an alpha. You see that this NEE beat earnings by 2 cents. They missed on revenues, but we see that even in pre-market it was up. But I want to go into the dividend section. So here's a good way to look at the dividends. I look at the dividend history, and you can see that this thing has been increasing dividends, which is obvious, otherwise it wouldn't be on that list. You look at the growth. We're going to just go to this growth chart and look at the growth rate. That means the dividend growth rate is this. And remember, the key for dividends is what? You want to make sure that your growth rate passes the rate of inflation over a long period. So let's just assume inflation is 4%. And I know it's not, but we're going to use a number that's a little bit higher than normal. If inflation was 4%, what this is saying is, on average, my dividend is growing 10% a year. This is compounding annual growth rate, which means you're going to pass it. So your money is actually not losing money. Your dividend is actually passing it. So over the years, it's going to keep on exceeding inflation rate. So your money is not losing money. Here it will be growing. And the best way to look at this is just look at a chart. You can do a 5-year chart. It's pretty obvious that if the years of growth is 25, doesn't matter how you look at it, the chart will be uptrending, which makes sense. When you look at a yield on cost, all it means is how much money you're making from a yield point of view. Like if you invest $100, if you only get 1% back, that's a $1 return. And the longer you hold the stock, 5 years, so if you invested $100 back here, you're getting $5 back. And if you invested 10 years ago, every $100 you invested, you're getting $10 back. And if you look at the 20 years, it just happened to be close to 20%. So every $100 you invested, you're getting $20 back per year. And that's pretty impressive, no matter how you look at it. So the question is, why should you invest in an energy company? Most people invest in energy because of the dividend yield. What you want is, you want this dividend to constantly grow and, again, outperform the rate of inflation. So that's what most people do. Now, that's just one component of it. Let's do something really interesting. We're going to compare NEE to the S&P 500. S&P 500 will be in red. And I want to show you something. So NEE is the energy company. So why invest in energy company? Remember, you're collecting the yield. But I want to show you something really interesting with NEE. If you zoom out for 3 months, NEE is in blue. You see that? It returned 14% in the last 3 months. S&P is a few percentage behind. Zoom out a little bit longer. NEE caught up, outperformed by 5%. We'll do 1-year chart. In a 1 year, NEE nearly doubled the performance of the S&P 500. In a 2-year chart, NEE more than doubled, 100% rate of return versus 44% return. In a 5-year chart, here you go, more than double. And now at this point, if we just keep on scrolling out, you will see NEE, for an energy company, you have outperformed. And most people who are buying energy or utility companies, you're not really buying utilities that outperform the S&P 500. You're actually buying it for the dividend and for the safety. In a recession, most people will not stop using electricity. You're still going to pay your energy bills or your water bill. And utilities are very stable. They're generally recession proof. And this is why it's a good investment. For the last comparison, I want to add in the NASDAQ 100. We'll put that in green because that thing has been really hard to outperform. And you see that? Here's a short-term window. Let's do a 1 year. NASDAQ has outperformed. You see that? 2-year chart. Wow, that's incredible. When an energy company can outperform the NASDAQ. 5-year chart. NEE outperform the NASDAQ. So the NASDAQ is here. This is your S&P 500 and this is NEE. And let's start zooming out a little bit more. Zoom out a little bit more. So that's pretty impressive. No matter how you look at it, an energy company is outperforming the NASDAQ. And I want to go back here. Some articles. Utilities appeared to head higher in 2021. You see that utilities are a great way to earn a decent dividend, a great way to be defensive. And if you're in retirement, it may be a good way to play if you cannot handle the S&P volatility. Again, S&P is a standard. But if you're older and you want to remove some risk, some people do move into utilities. What I do like is if you look at the number one holding, Next Era Energy is 14% of the fund. So I like this. This is great. An ETF is a great way to own all the utilities to get a stable return with a little bit less risk. Much better than your bond fund, maybe. Better yield, I think. I mean, you can get 3-4% yield on a bond fund. But sometimes people like the growth. You want the growth of the stock market still. This is one way to do it. I own utilities. I own single stock utility companies. I talk about that a lot. So NEE is one of my favorites. And I do have another energy company that I held for 20 years. And even that one has outperformed and it done really well. But as always, that's the end of this episode. Please hit the like. Give me a thumbs up. Comment below on what companies you are investing in and whether or not you have any utilities and which one you like. As always, let's do this together. Let's do this $1 at a time. Have a profitable day.